know I'd be teaching people how not to get burned by their mortgage. In the next 8 minutes, I'm going to teach you the 4 most important lessons that I've learned in the mortgage industry over the last 12 years. And I promise each lesson will have a takeaway for you, not just how to save money, but help avoid costly mistakes. The 4 lessons I'm going to cover is mortgages are matchmaking, not math. Number 2, the 68% rule. 3, the incentives drive the offer. And the 4th is mortgage content, what they get wrong. So let's go into lesson number 1. I started my mortgage career as I was finishing up my master's in education. I took the job selfishly. As a real estate investor, I wanted to learn how to make my application stronger for the bank. I wanted to figure out how I could purchase additional rental properties. And here's what I found. MCAP, the largest mortgage company in Canada, gave me a job, and they own a ton of lenders. What I found was it was not simple math. It wasn't only about income, debt, and credit score. Each lender had a specific type of client that they were looking for. Some like condos, some like families, others liked rentals. And the lenders made specific rules to try to attract this kind of clientele. And look, I'm not here to say that income, debt, and credit score don't matter. They do. If you qualify for every lender, you will guarantee to get the best rate. What I am saying though is just because one lender doesn't approve the mortgage, it doesn't mean that you cannot qualify. It just means that there may be a mismatch with the lender and what type of client you are. So linking this back to matchmaking, if you were to go on one date and they were to tell you that you're not compatible, would you think that you're going to be alone forever? Probably not. You just need to go on a few more dates with a few more lenders to see if you are a fit. You know what? After 50 people reject you, it may be a sign that it's you and not them. Here's what most people miss. If you go directly to the lender, you only get one option. So working for MCAP was interesting. We learned all of these different options available to you. But if you called MCAP, I couldn't offer their sister company RMG solution, even if it fit better with your needs. And this may be a time where you think that I'm going to pitch brokers. And in some cases that's true, but I want to be clear. There are a ton of banks that offer a ton of these type of products. I'll also say this, there's a lot of mortgage brokers who only work with a couple of lenders, and you're in the same situation calling them than calling the lender directly. What I'm trying to say is that just because one lender says no, it doesn't mean that you should give up. You should look for other options available to you. So before accepting a no, ask whether it's the deal or the lender that's the mismatch. And this leads me into lesson number 2. At MCAP, I worked with the renewals team, and we dealt with about 700 renewals at a time. And this stat that they taught us in training was something that will stick with me forever. It said that 68% of all people will sign back the renewal offer without a phone call or an email. So they made a suggestion. We should send the highest rate that we have available to these clients. And 68% of them statistically would not call or email, they'd send it back. This allowed for us to be strategic on who we offered lower interest rates to. And look, most people are busy. Lenders understand this though, and they take advantage of it. They default to convenience. The average person does. And they assume that the lender will reward loyalty, but that's just not the case. So let me ask you a blunt question. Before this video, if you got your renewal offer or if you've renewed your mortgage in the past, did you call? Did you email? Or did you just sign back the offer? And look, no judgment here. You would be in the majority if you did so. But look, mortgage mistakes are not small mistakes. They can be 5-figure mistakes. So when your mortgage comes up for renewal, this video, if you change your behavior, would save you thousands of dollars. What's the takeaway for you? Doing nothing is still a decision. If your mortgage is coming up for renewal within 180 days, reach out to your lender, reach out to a broker or a bank, figure out what is being offered in today's market. Now, the obvious question is, why does this happen? Why do banks not reward loyalty? And that brings me to lesson number 3. In order to understand this, we need to understand incentives. Let me tell you a story. So when I worked with MCAP, there were people in a 10-year mortgage term. That means that you had the same rate for 10 years. And rates were going down at the time. After 5 years, their penalties dropped substantially. And I collected all of these people's numbers and I ended up reaching out to them. I looked at this as a teacher. If I had a better solution, it was my job to educate and try to make improvements to these people's lives. What happened next was super surprising. I got in trouble, not because it was illegal or immoral, but because it was hurting the company's profit. And before you go into the comment section, first of all, MCAP is not alone in doing this. Lenders are businesses and their goal is to have the largest profit with the least amount of risk. It's an incentive problem. Your goal is to have the lowest rate with the most flexibility. So here's something else that most people don't know. There were different rates if you were to refinance during your term, at the end of your term, or if you were trying to refinance before you became a client. At the end of the day, when you start, most lenders know that you're working with a mortgage broker. MCAP works exclusively with mortgage brokers. And what they found was that you needed to be competitive rate-wise in order to get mortgage business in the door. During your term, because there was a penalty and you were calling the lender directly, most people would accept a higher payment or a higher interest rate. At renewal, it depended on the ebbs and flows of how much business had come in the front door. In some instances, the renewals were extremely aggressive, very similar to the rates that people were getting when they first came to the lender. Other times, they were not. They were trying to recoup some of the money because in the first 5 years, lenders make a lot less money because they have to pay the broker for that business. So in some cases, they were trying to get or recoup some of that cost. Again, incentives. They're incentivized to maximize profit and lower risk. And this is important. Sometimes switching is the right option. Sometimes staying is the right option. But it's important to know which of these two options are available and for you to make the best decision for yourself. If I can leave you with one thing from this lesson is understand people's incentives. Lenders' incentive is to have the most amount of profit and the least amount of risk. Your incentive is to have the lowest interest rate and the most flexibility. A mortgage broker's goal is to have the most amount of clients and make the most amount of commission from each of those clients. I make a full video. You'll see how to get the best mortgage rate. It pits lenders against brokers and will show you how to get the best rate option. And so this brings us to lesson number 4. What is the incentive that I have to make a mortgage channel? Well, mortgage channels fall into one of two categories. One that's always trying to sell you. You'll see it when they say, hey, now is the time to buy. Buy now before it's too late. On the other side is that everything is falling apart. Every single video they have is how today is the worst day in real estate and until the next video comes out. And their goal is just to have you watch one video to the next to the next. I decided from getting phone call after phone call after phone call from people concerned on both sides, whether it was, hey, we are going to miss out on an opportunity to buy a home, even though the market has not changed over the last 4 years, or saying, hey, we're worried that our house is going to drop in value by an additional 50% because of all of the negative news. I wanted to be a middle ground. I wanted to teach in plain English mortgage information. I wanted to give you both sides of the argument. I want to show you the trade-offs that you're making because it is never a good time to both sell and buy in the same market. And look, I'll tell you something's a bad idea. It is my opinion, but I have been in the industry for 12 years. I have seen both ends and I will tell my opinion even if it's wrong. And I will stand by it and I will let you know if I have made a wrong call and correct it as soon as I can. Here's a takeaway for you on this. If you are surprised, that is when mistakes happen. The more you know, the less you're surprised. So education is one of the most important tools to save you money. And look, you have to know what questions to ask. You need to know what has to happen in order for you to be able to save money. And this is not your fault. This is the system's design to be overly complex. So if this seems of interest to you, if you want to learn more about mortgages, subscribe. I want you to comment the one thing that you wanted to know before you sign your mortgage. We'll make a video on. And if this is something that you're interested in, follow my next video.